Okay, we're going to move into the next section, okay, on market terminology. Now, some of you guys have been involved in the market before, and maybe to a great extent. So some of this may seem familiar to you, but I'm going to try to give it a little bit more color. Market terminology, so that we all speak the same language and understand what's going on here. Some of this is simple, some of it gets a little bit more complex. We use terms like bear or I feel bearish. This means that we are biased to lower prices. We expect the market and or our stock to go down. Okay, that one's pretty easy, huh? How about bull or bullish? We expect the market to go up. Alrighty? And so we're looking for prices to appreciate. We're looking for our stock to go up. I'm bullish on the market. Now, this one has a couple of different terms in it. It's called the NASDAQ system. The first four letters is NASD, or the National Association of Security Dealers. This is a group that was formed after the great market crash in 1929. In the mid-30s, a group of people, traders, got together and they petitioned the SEC and said, we would like to be self-regulatory. We'll police ourselves, but we want to have our own rules. And the SEC said, okay, well, as long as you do it within certain guidelines, we'll let you. This became the National Association of Security Dealers. In 1971, they launched the National Association of Security Dealers Automated Quotation System, or NASDAQ. It was the first 100% computerized trading system. Okay? Now, obviously, the NASD members, people like Merrill Lynch and Goldman Sachs, they had a direct line to the computer at NASDAQ. And we came along, and I want to explain to you, it shows you down here on the left side, and it looks like we're connected directly to the NASDAQ. I do not wish to mislead. Let's have a look at this for a second. Again, I've already mentioned this. Here is you, okay, and here is the NASDAQ. Unless you happen to have a Series 7 license, you are not actually allowed to go directly to the NASDAQ. We have to pass our orders through a direct access trading server. Nobody's handling your orders. Nobody's rerouting it. You're deciding on the route. The only thing that server does is checks to make sure that you're legal. And if it is, they go, nombre patria pass, and nombre patria pass, nombre, as fast as it can electronically. Okay? And as long as you have the amount of buying power in your account, you're a member in good standing with that brokerage firm, and you're putting in a legal order, it just blesses it and passes it right to the NASDAQ. So we're kind of borrowing the Series 7 offered by the direct access broker-dealer. Everybody understand what so I don't want you to say, oh, I'm on the NASDAQ. You're there with a little bit of a blessing. Okay? Alrighty, so the NASDAQ was created in '71, as I said, and it is strictly an automated computer quotation system. And then the market makers can then buy and sell, but there's no physical exchange. Market site on Times Square, that cool round building with all those TV sets in it, that's not the NASDAQ. That's where they sell you T-shirts and coffee cups. Okay? That's where, so a talking head can stand in front of a quote and go, and today the NASDAQ is down. Okay? Where is the NASDAQ? I think it's in South Connecticut. And of course, it's a room with a bunch of computers in it. And there's two guys sitting in there with Cokes and pizzas. And they're watching green and red lights blink and eating and drinking. And when they don't blink right, they stop. And then they start, and they have some more pizza and Coke, okay? So it's purely computerized. We call it a dealer market. Why? Because we get to make deals. Pretty much you've all been to a swap meet, huh? And you go in there and you're walking around, and here's this guy, he's got his table set up, and there is the item of your dreams. The thing that's going to be the heirloom to your family. You want to pass it down to your children's children's children. It's a silver hat with 2 beer cans on the side and 2 tubes that come down to your mouth, and it says "Go Raiders" on the front. And you go, "Oh, I've got to have this. This is for my kids." Okay? And you say, "How much?" The guy says, $10. And you say, 8. And he says 9.5, and you say 8.5. Well, you guys all know what's going to happen. We're going to shake hands at 9, aren't we? I'm going to make this deal. And you're going to walk off with your treasure. This guy's laughing himself sick as he puts another couple beer cans on a Raiders hat, you know. But you're happy, he's happy. You made a deal. You made a transaction. This is exactly how the NASDAQ works. These guys offer, bid in offers, okay, and people come and transact with them. And if you can't get the deal, I want to sell it for $10, but nobody's buying $10, then I have to do what? Lower my price. I'll go to $9.50. Nobody's buying it. I'll lower my price to $9. Oh, here comes somebody who wants to buy one of these dumb hats at $9. Make the deal. You ready? So that's how the NASDAQ works. Now, most of the other exchanges, and certainly the New York Stock Exchange, is what we call an auction market. Now, I know it's hard to believe. I mean, IBM is a New York stock, huh? One guy, he's called a specialist, is in control of all the shares that are traded on IBM, or virtually all. Now we're starting to get in there with some electronics. But now, the order may come to him by computer, but he still has to say whether it's going to be filled or not. As long as we're talking about terminology, the group of buyers and sellers that stand in front of the specialist is technically called his crowd. So he works the crowd. So on this side, you guys are the buyers, and on this side, you guys are the sellers, and I'm going to auction it. And how do I auction it? Well, it's just like a real auction, guys. I go in and we say, and of course I don't know what the price is, but let's say IBM closed yesterday at $90, and there's good news in it. So I come into you guys and I stand up here and I go, okay, ladies and gentlemen, we're going to open IBM today. Are you ready? Opening offer, I'm looking for $91. Do I have any takers at 91? Anybody willing to buy? Anybody willing to sell? Anybody willing to sell? Anybody willing to buy? 91, 91, 91, 91, 91. He says, I'll buy it for 91. I go, great. Price is now 91 and 10 cents. Anybody buy it for 91 and 10? 91 and 10, 91 and 10. It's really like an auction. You've seen these guys sell, tobacco, going once, going twice, going 3 times. Well, they don't do that, but they just keep the price going. If you've never noticed, please do so now. Have you ever seen that New York stocks do not always open right at 9:30? In fact, on CNBC, we've got Maria Bartiromo, and she's on the New York Stock Exchange floor, and she says, well, there seems to be a trade imbalance today in IBM. There are more buyers than there are sellers. It closed at 90 yesterday, and we see indications that it may open as high as 94. The bell goes off, and she goes, we're still waiting for IBM to open. Why? Well, because the poor auctioneer is trying to find somebody who will sell it at a low enough price to get the thing started. It is really great news. You guys, you want to sell it for 95, and you guys want to buy it for 94. It closed at 90 yesterday, remember? Okay, so you're having a hard time coming up with an extra 50 cents, and you guys are having a hard time coming down 50 cents to meet. And until the specialist can find a balance between you guys, we can't open this stock.
He doesn't buy themselves.
Well, I'm getting that, Al. I'm getting to that. Everybody with me so far? So I'm going, come on, somebody sell 94.50s. Somebody buy 94.50s. You guys say, no, we're buying 94s. You guys say, no, we're selling 95s. At some point, the specialist is commanded to do what? He must maintain an orderly market. So let's make this a real bad trade imbalance. We got 4 buyers over here, okay, and we've got 6 or 7 sellers over here, okay? And you guys don't want to come up, you guys don't want to go down in price. I then have to assume the role and help you guys. So if there's 4 of you and there's 7 over here, I have to become 3 more buyers or sellers, whichever side you're on, okay? So I can balance it, so we can find that happy ground. Now, if I'm going to do that, Let's do it easier so it's easier for you guys to think about. It's bad news in IBM. Yesterday it closed at 90. Today it looks like it's going to open up around 87, but nobody really wants to buy 87s. So eventually I have to step in. Now, am I taking a risk here as a specialist? Am I buying a stock with bad news? Yes. And I might have to. But if I'm going to take the risk and I control the price, might I set the price in my favor? Sure. Okay, I'll buy everything out there for 85. But Mike, it should have gone off at 87. I know, but I'm taking a risk. What do you think the next? This is a good old boy system. You ready? So I'm the specialist and I have you guys all here and we're conducting business. We're conducting business at $87 and $87.05 and $87.10 and $87.05 again. And the guy who took me at $87.05, are you angry that I just gave it to him for $86.90? What are you going to do about it? I'm the specialist. If you don't want to trade with me, get out. I control the stock. Okay? And this is exactly what has happened and will continue to happen. It may be your brother-in-law. Okay? It may be a favor owed, but it's not fair.
But there is an advantage sometimes for you, right? But let's say...
Well, there will be an advantage for you, Al, as you become more knowledgeable and more disciplined in this by understanding the system. And I mean, you're giving me extreme situations, so I'll give you extreme answers. The answer is yes. You can always get out of it. But the same is true on the NASDAQ. There's always somebody who wants to buy it at some price. At some price. Okay? So whether it's a penny on the NASDAQ or a penny from the specialist, it's still a penny.
You don't have a specialist on NASDAQ.
No, we have other people who wish to deal. But there's always somebody. Didn't I tell you there's somebody willing to bid a penny?
Yeah, right.
Could I sell it to him? Sure. He has to maintain a legal quote. We're going to get into that. You ready?
The thing is, though, with, like, say you buy it for 85, you open it, you're make you buying it. That's kind of like that lightning strike by the cattle herd you're talking about. You're going to send the market one way or another by how far off base you are, correct?
Yes and no. I control the price, so I won't let it run too far. I certainly won't let it go against me, will I?
No.
What if I know that there's buyers, but not enough at 87? Well, then I'm gonna open the price at 86, and I'm gonna bring the price right up to 87. I'm gonna make a buck on the deal, and you're gonna get your buy at 87. These guys are the ones that are gonna be angry. They wanted to sell it for 90, and they have to sell it for 87 or 86 to me.
Is there a way for us to know if the market maker or the specialist is the guy that bought it in the morning to get it going?
Yes and no. Okay, obviously the first thing we want to do, and again, you're already jumping me into tactics, okay, it's if we see that there is a trade imbalance. Now, how would we scout for trade imbalances? Well, the night before we watch news. Is it great news or is it really horrible news? We don't care. We want an extreme either way. We know that if there's going to be a trade imbalance, that the specialist, would he like to unload some of that risk onto me? But what's he going to do for himself? He's going to protect himself, and if he buys, he's going to bring the price up. If he brings his price up, is he bringing my price up? Yeah. So yeah, I can use this to my advantage, but we're getting fairly sophisticated for this level. Can it go against you? Sure. You know, you're holding for a dime and it only goes up a nickel, you know. But sometimes it goes up faster. Okay, continuing the terminology here. We've already looked at a level 2 and talked a little bit about the bid. The bid, again, is the left-hand side column. And as we already know, it is hopeful buyers. They are not buying. Buying is an active verb. I buy. I go over and I take it and I give you money. I bought. But if I'm bidding, I have to wait for you to come to me to give me the stock, and then I would give you money. Okay? Again, everybody at each price level is equal in the eyes of the market because they all just show 2 digits. So there's no hierarchy in any given color. We also know that at the top is the cheapest price, and as we go down in color increments, the price gets, or the highest price at the top, and it gets cheaper and cheaper as we go down. Everybody with me on the bid so far? Okay. Now, the next term here is the best of the bid, or what we call the inside bid. You ready? And so now we're just looking at this yellow box portion. The whole column is called the bid. The best of the bid is called the inside bid. You ready? And again, these people are all offering to buy at the same price. They're bidding to buy, what, 1706s, the 06s there. The right-hand column is the ask, or sometimes we say the offer. Okay, again, offer is a lot easier to say in an English sentence. All righty? These guys are offering their stock for sale. In this case, it's $6.31. As a sideline, it's not in your books, okay? We take the offer, we hit the bid. Okay? You can't say I hit the offer. That would confuse a professional trader. We take the offer. That means we're buying retail. In this case, we'd be buying the 31s. And we hit the bid. Okay? So again, the offer or the ask, the selling price, the cheapest selling price is at the top, and it gets sequentially higher as we go down the column. All righty? And the most expensive, of course, is at the bottom. If we had a bid and an inside bid, we have an ask and an inside ask. So now we have the best of the offers, which is the inside. Now, if you take a look up the board here for a moment, these things start to become somewhat synonymous, okay? If I could spell. Alrighty, and could we also call the inside market the national best bid or offer? Uh-huh. Okay. And you'll hear traders say, I took the O at the inside. What did I do? Jim, what did I do? I took the O at the inside. I bought the offer price at the inside ask. In this case, I would be buying 08s. So if we're inside the market, what are we if we're not inside? Well, we'd be outside the market, okay? Well, we say away from the market. So if I said I took the offer away from the market, then I would be paying 09s or 10s. If I hit low away from the offer, I'd be selling for 06s or 05s. Now, guys, how many live traders are you going to be talking to on the New York trading floor through your computer? You're going to have to shout real loud for them to hear you. Okay? But I just want to give you a little color here. I want to give you an idea of how we talk about these things. Oh, we see the O printing. Well, that means that in the time and sales, which we haven't talked about, we'd see a lot of 08s. The O is printing. The offer is printing. I had to get out of this thing, so I hit the bid. It means I sold out to the willing buyers at the 07s. I just wanted to dump it. Got this hot potato? Give it to somebody. I hit the bid. Everybody with me? What is slippage? Slippage is a price that is different from what you expect to get.
If you're not trading direct access.
Slippage is defined as getting a price that you did not expect. It doesn't matter whether it's direct access. Work with the definitions. You're trying to make too much out of this, David. Okay, what is slippage? I expected to buy this thing for 20, but at the moment of process, the price changed and I got a price difference. It could slip in my favor. Everybody assumes it's negative. Yeah. I specified that I will only pay $20 for this. If I get it for 15, I will be happy. But I will not pay any more than 20. I cannot be slipped bad. I can be slipped good, but I can't be slipped bad now because I specified a price. Yeah. But what's the problem with that? I may not get filled. What if the price is now $20.01? That's what the market is selling, and I want to buy it for 20. Well, okay, I don't get filled. Ready? I'd like to buy it for 20, but they're selling it for $25. I wished I had paid the 20.01. Okay? But if wishes were fishes, we'd all cast net. Okay? So these are just different terms, people. Now, by the way, it's good they took it out. It used to say always in yellow. These colors mean nothing in the platform. You can make them any color you want. Okay? One of our instructors, Merlin, was actually a little colorblind, and he could not see the difference between this yellow and this green. Questions so far? We good to go? Good. Okay, now we get into the spread. The spread is the mathematical difference between the bid and the ask. Okay? And as you look up here, you can see this thing is trading 731 by the 34s. So we have what? A 3-cent spread. Okay? Now, spreads, we'll get into this in great detail, but the larger the spread, the more volatility is usually in the stock, and therefore the higher the risk in the stock. And it makes sense. Remember that a market maker is buying wholesale and selling retail. So if it's a very risky stock, he wants to buy it cheaper and sell it for more, so the spread would be bigger. Okay? And if it's not a very risky stock, well, then he can afford to buy it for $7.31 and sell it for $7.32 without too much risk. So the bigger the spread, the more risky the stock. Now, you guys, I'm going to try to get you to play with stuff that has less than 5 cents spread in it for right now. You ready? I want you guys playing with stocks that have 1 or 2 cents in them. You start getting above 5 cents, and you're playing with dynamite. You're running around with scissors. What'd your mother tell you about that? Don't run with scissors, right? You'll poke somebody's eye out with that. Moving right along. Next to level 2, we have a thing that's called time and sales. Okay? Traders call them the prints. Prints are the actual display of every transaction that happens in the marketplace. We've already talked a little bit about not being able to trade real property without a license. You guys are probably also aware that in most legal transactions, it has to be posted for the public to see. If you look in the want ads or the classifieds, you'll see the house at 123 Adams Street was sold. And I think it has to run for like 3 days in the local newspaper. You'll see people's divorce notifications in there. I am now responsible only for my debts. Okay? This is a legal notice to the public. Well, whenever a transaction goes on in the stock, they have to give a legal notice to the public, and this is called the prints. All righty? So every trade is shown. Now I say every trade. If they're less than 100, they do not display them on the prints, but they aggregate them in the books at the end of the day. So if Trish sells 10, and he sells 10, and he sells 10, and he sells 10, at the end of the day, they just say, journal entry 40 shares. Okay? But if it's 100 shares or larger on the NASDAQ, they must show the prints within 90 seconds of the transaction or have a reason why not. On the New York Stock Exchange, I believe it's 180 seconds, 3 minutes that they have to display. Why? Well, they're a slower system. They don't have all the wonderful communications and computers that NASDAQ has. So they have a little bit more time. Now, the question is here we see a transaction for $37.71 for 300 shares. Is that a buy or a sell? It's a trick question. It's a transaction.
Yes.
It's yes. The answer is yes. Bill's right, okay? It is both a buy and a sell. Somebody had to buy it. Somebody had to sell it. But you'll notice between the spread, so let's put a W between the bid and the ask. Ready? And then it says it's red at the inside bid. And if it's below the inside bid, then it's purple. Everybody understand where I got these colors and how I put them on this chart? Is there anybody who does not understand? Let me ask that question smarter. Is there anybody who does not understand how I got these colors in here? Okay. Once again, we have determined that we're going to be green at the inside ask. Where is the inside ask, David? Okay? Let's make this easier. The thing is quoted right now $10 by 10:01. Okay, so the best asking price is 10:01. So that would be printed green. Okay? Yellow would be 10:02 or higher. Okay? Red is 10, purple would be 9.99 or lower. And white would be what? 10.00 something. Okay, you with me now? Good. So now let's think about this for a moment. So we look at it here and we see the green 86s, okay, at the top of the chart up there. What does that mean? Well, it means somebody went and paid full retail. They didn't wait to buy it at a lower price later. They bought it right now at the asked price, at the offered price. Is that right? Is that what green means? Okay. So if there's a lot of people paying green, they're buying full retail, does that not denote buying pressure? If everybody's paying full retail, is that a seller's market? Is that another way of looking at it? The sellers are getting the price that they want. There's no reason why they should drop their price. In fact, if there's a lot of demand, they might even do what? Raise their price to the buyers. Okay? So, can everybody see on the screen that we have a predominance of green in here? So there's some buying pressure in here. Of course there's going to be somebody selling. There always is somebody. But by and large, what are most of the people doing? They're buying from the inside ask or even higher. Now, if here's the inside ask is 81, okay, it's yellow 83s, or in this case, 82s or 83s. Conversely, if we saw this screen and it was predominantly red, that means people don't want this product anymore. They're dumping it. They're selling it out to the wholesalers, to the pawn shop. Remember the pawn shop? Let's just get rid of this. See if we can get a couple bucks for it. As Al said, I just want to unload it. I want to get something for it. Okay, so get rid of it. So if we saw a predominance of red in here, then we would see selling pressure. That make sense? Yes or no?
Yes. Is that going to change as fast as the level 2
Yes.
changes?
Uh-huh. We're going to find a slower stock for you to watch, though. Again, you don't have to watch the fastest thing out there. You don't have to drive the fastest race car. Guys, realize you've been driving relatively broken down Volkswagens. I'm going to put you in an open wheel Formula One with 1,000 horsepower. Okay, you got to be careful with that first turn not to put it into the wall. We're going to.
Your analogies are wonderful.
Thank you.
We just want to get off the grid.
Okay, now, does everybody, I want to make sure, because I'm going to make an idiot of myself up here. Does everybody understand this fairly well? This coloration thing? Now, I can change the colors. I'm not going to do that to you. Okay, but you can make them anything you want. This is the scheme we will work with here in the class. You ready? So, any last questions before I make an idiot out of myself? Yes?
Well, then the only comment as to what Dave said is actually this could be potentially at least 90 seconds delayed, though, as opposed to level 2 bid ask. Because,
But remember, bid ask is nothing but hopes and dreams.
Right.
Okay, and the reality of it is that this is 90. Okay, so that's the worst possible. But the reality is even New York is almost instantaneous. It's just that when somebody slips and drops a piece of paper.
That was not a deliberately instilled delay. That was just a requirement within that.
Right.
Okay.
Needless to say, they don't have time to mess with this. I mean, the computer, you hit the button, it's recorded on a computer shows it. Yes.
Was this initiated by law?
Yes. Yes, again, it was constitutional law that certain legal transactions have to be displayed to the public, okay? And whether it's you accepting your own debts for a divorce, whether you're selling a piece of real estate, or whether you're transacting an ownership in a corporation, it must be shown. Does the public look at this? No, they don't even know it exists. Just like you don't know that 123 Adams Street was sold yesterday and you don't give a darn. You don't even live in that city. I'll draw something up here on the board for you. There's always an exception to the rule. And this is what we call late prints or out-of-the-money prints. Now, can everybody see on the left-hand column here that pretty much the prints are going 81, 80, 81, 81, 80, 81, 81, 82, 80, 82, 83, 86, 83, that it's fairly smooth. Now, there's not a lot of, and yeah, it does jump from 80 to 86, but it's not out of the realm of possibility, okay? If you look on the right-hand column, everything is 35s and 34s, and all of a sudden we get a 17. How does that happen? Well, one of the things that you guys don't realize is that you have the right to complain about every trade, okay? However, you must call within 20 minutes of the transaction in question. So, I wanted to buy this stock at, I wanted to sell this stock for $3.35, and somehow, I don't know how, I got filled at $3.17. That's too far away from the money. Okay, and so I call NASDAQ in this case, and I complain. I say, guys, I put this thing up for sale for $3.35, and I got filled for $3.17. What are you going to do about it? They say, well, Mike, we're going to investigate. So they put that transaction on hold, and then they go and market order in there. It's whatever the market will bear. And I don't think he should get this trade busted. I got it for the 317, and that's what I want. NASDAQ looks at their paperwork, they look at my history, they look at his history, and they come back and say, Mike, I'm sorry. We did check into the computer records, and while you think you placed a limit order at 335, you actually hit the market button by mistake. You don't know your platform very well. Remember I said you have to have perfect knowledge of your platform? And you hit the wrong button. You're wrong. Okay, you're right, guys, I guess I goofed up. The thing is we can't react to it. We're happily in this trade, and we see these 335 streaming down, and all of a sudden a 317 shows up, and we're long. We go, gulp, but there's not a second one. Let it go. Okay, now, if it goes 335, and then it goes 317, 317, 317, 317, bad news has happened. The CEO is just run over by a bus or something, you know. It's, you don't know about those things, but, quick turn on the news and see what happened, ready? It's cycles. It moves along in a wave format. It does this. If price is going down, it waves down. If price is going sideways, it moves sideways. If price is going up, it waves up. Everybody with me? There's always a cycle to it. So if we were to look at a price cycle, see how sharp you guys are. If price is going up, who's in control, buyers or sellers? Did I put a B up there? Buyers. If price is going up, people are buying ever higher prices for it. That's what's driving it up. What drives up price? Demand or supply?
Demand.
Demand. High demand, low supply drives price up. Okay? Okay, I'll give you another chance. Price is coming down. Who's in control, buyers or sellers? Sellers. Okay, you got it. Alrighty. So if we are professional traders, what did I tell you earlier? When do we want to buy? When price is going up or when price is going down? When price is going down. Okay? So if we had a support trader, I'm going to buy when price is going down. Is that a hard concept?
Yeah, it is. It's
Really?
opposite, yeah.
Okay. Now, that's because you're looking at it horizontally. Okay? Why would we want to buy through this line? What am I going to do? I'm going to sell and get out. I'm going to have the stop loss there. Okay? If it continues up, where am I going to sell it? If I'm a seller, who do I need? Buyers. Now, I can choose. Alrighty, everybody understand why I buy when price is going down? Now, if price is trending down, oops, I didn't make that very smooth, did I? But you guys get the idea? When do I want to sell short? When price is going up or when price is going down? When I sell short, okay, if I'm selling, who do I need? Buyers or sellers? Buyers. So when price is going up, even in a downtrend, that's where I want to sell short, here and here. I don't want to wait for it to go down in price. I want to sell it as high as possible, okay? But I want to sell it easy. And if I'm selling it, I need buyers. What if I wait and sell it short over here? Well, that's still pretty high, isn't it?
Yeah.
But the problem is what? I missed the opportunity of selling easily to buyers. I am now in competition with other sellers. And the only thing I can do with a stock in order to get my product sold is to lower my price. I mean, my Cisco doesn't come with dual racing mirrors. It doesn't have a 5-year warranty on it. Neither does yours. The only difference in stock is what? It's price. You want to sell it for 23 and somebody's going to buy it from you. The only thing I can do is step in and say $22.99. And the only thing you can do is step in and say $22.98. And then I say 97, you say 96. Oh, let's call the whole thing off. Yeah.
Well, you've got, like for your selling short, you've got just before the top of your curve, you've got to buy it or sell it short. That's the place to do it. Right on the other side, you've got, is probably not the place.
Say sell to me.
Hey, will you?
I'm selling short. I'm selling short or I'm selling short.
You're short.
Okay, I'm buying cover down here.
Right, so what's the difference which side of that pump you bought it on?
The probability of being filled, David. Okay, if I'm selling, who do I need?
Okay, so you're selling,
If I'm selling, who do I need? Say it.
Buyers.
Buyers. Where are the buyers located? On this side of the center or this side of the center? Left side. So I know I can sell short here. Okay, I can attempt to sell short here, but I may not get that price. Why? Because all of you want to sell that price, and now I'm just another me too.
so you're saying this is moving real fast?
Should he buy from any one of you at $10?
This is an issue of supply and demand. Suddenly, you have many more shares on the market of trying to get rid of, and there's not enough buyers. So your order's not going to get filled because several other people also wanted to unload, and only one person's out there still buying.
That's what I just said. I said there's support. We sell near resistance. So what is the bottom of this cycle? Is that support? That's why price turns and goes back up. So we want to buy near support. Now, what David is saying, and let's say this stock here is $30. So we're going to buy it at $30.05 right here. We're buying near support, right? We're not buying at support. Everybody with me so far? Okay. Well, this side of the curve is also near support at 30.05. What is the difference? There's more people buying on here, and you're just another person buying at 30.05. So we look at a level 2, and we've seen a couple where there's only about 3,000 or 4,000 shares. But there's 10 of you, and you all want to buy 1,000. So there's only 3,000 available, and 10 of you want to buy 1,000. So only 3 of you are going to get filled, or 1 of you is going to get filled for 3,000. And then somebody's going to have to pay a higher price. Is that true? Okay.
If you put a limited order in there, you might not get filled. If you say at market, you most are going to have slip.
Well, that's my point. The point is if I wish to buy at 30.05 and I'm on this side, I may not get my fill. I may have to pay 06s, 07s, 10s, 12s, 15s, whatever. Okay? If I'm on this side, there's a lot of sellers, and I'm a buyer. I'm one of the dwindling. Is the selling pressure becoming incredible here? Yes. So all I have to do is say, I'd like to buy, and everybody's going to dump it on me. Okay? And I could probably get this thing for what? 30.01 comfortably. Okay? But I'm going to say I'm going to buy near. I just want to make this even. Now, people, as beginning novice traders, I want you guys to have confirmation in your life. I want you to see it hit support and come up and here is where you guys are going to buy, but I'm going to buy it over here. What is the difference? Well, the first difference is I'm assuming this much more risk. Because could the price go through the line? Yes. But I am a risk manager with a very perfected, no, maybe not perfected, but a very tried and true discipline. So if it goes through that line, I know that I will get out without flinching. I won't hold and hope, people.
So what you've done is you're buying on the risk with a prediction, whereas we would wait for confirmation of the upturn.
Correct. And if I am going to take more risk, what is my reward? I'm going to get filled more often. I'm guaranteed almost, nothing's guaranteed, but I'm almost guaranteed that I'm always going to get my fill at 30.05. 30.05. We're both going to sell it at the same place. And where is that? Near resistance. So we're both going to get out right here. Why? Well, we're sellers. What do we need? We need buyers, don't we? And that's when do we find buyers? When price is going up. If we wait and try to sell it for the same price over here, well, we're sellers with an ever-growing group of sellers, and we may not get out for the price we want. We can always lower our price, but then we're giving back our profits, or worse, eroding our capital. Okay? Everybody with me now so far? Good. Okay, now it's time to make an idiot out of myself. Now, how do we equate that with the slide in question? We've been talking about the prints and where we are in the scheme of things. So, now I want you to take notes on every word I say here. I'm kidding. Watch and listen, because this is a function not of just color, but of speed as well. Now, if we are at the top or the bottom of a trough, does everybody understand that the prints will slow down as people don't know what to do? Okay? So as we came down here, we would have red, 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 purple, red, purple, red, purple, 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 red, red, green, white, white. Everybody get it? Can I do that again? Thank you. Repeat it perfectly. Again, to see the yellow, green, yellow, green. We don't want to wait until it starts going red, 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 red. It's too late. All righty? So by watching the prints, we can start to say, okay, when it starts going red, green, white, red, green, it's slow and it's mixed, we know that we're at the top or the bottom. Now, how do we determine where we are at the top or the bottom? Well, we draw a trend line. Okay, if it's going up, we'll see the price, trending up, and it'll be going green, red, white, green, 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 red, 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 white, green, white, red, red, green, 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 red, white, green, white, red, 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 red. So we should always know where we are by just looking at a chart, drawing a trend line, whether it's an up or a down trend, and looking for the slowness or the speed and color of the prints. Does that make sense? Okay. Now, obviously, you guys are brand new to this. As I said on one of the breaks, this is kind of like driving a car. When you were 15 and a half, 16 years old, and mom, dad, brother, or sister took you driving, 25, 30 miles an hour was lightning fast. And the first time they said, let's go on to the freeway, you literally gulped. You went, oh gosh, here we go. I've got to go on the freeway. Okay, that's fast. Now you guys drive at 85 miles an hour. You got an elbow out the window. You got a Krispy Kreme stuffed in your mouth. You're driving with your thighs. You're putting on makeup, and I'm not picking on the girls. Okay, so, I forgot the cell phone in your ear. All righty. Now, 85, 65 miles an hour doesn't seem all that fast to you, does it? So what we need to do is, if it's too fast to learn from, it's certainly too fast for you. So we got to find stocks that move a little bit slower so that you can start to see these patterns. Questions so far on the prints? Good? Okay, moving along in terminology then. We have the stock symbol. I hope you guys are fairly aware that NASDAQ has 4 letters or 5. The 5th one is a modifier, okay? Now, you don't have to worry about what all the modifiers are, because if you're trading a stock, do you know everything in the world about that stock? If you're risking money on a stock, have you done some research on it? Well, yeah, you sure should. You wouldn't want to know anything about a stock? What if a stock has a Q on the end of it? That means it's bankrupt. Do you want to be taking that one long? Probably not, okay? So if you're going to play a stock, you want to know everything about it. Is it a healthy stock? Does it have good management? Is it above its 200-day moving average? What is its average daily trading range? What is its average daily volume? Who's the hammer in it? I want to know all those things and more. I hope you guys do, okay? So it doesn't matter what the modifier is, but there's 26 of them. One of the ones that has been in the news lately is an Israeli firm that's called Gilead or Gilad, and its symbol was GILDF. What do you think F stands for? Foreign, okay? And just recently, they have applied and got full status here, and their symbol has changed to GILD. Okay, now they're fully traded on the NASDAQ, and they're considered a domestic company, even though they're still in Israel. You ready? There's a whole bunch of different modifiers, like I say, obviously.
Is there a list someplace where
Sure, certainly. You can get it in the Investor Business Daily or the Wall Street Journal. On the front page of the quotes section, there is a whole list of all the modifiers. But again, when you study the stock, when you say, oh, I think I'm going to play Cisco, okay, you'll start reading about Cisco and you'll go, well, it's not bankrupt, so it doesn't have a Q, and it's not foreign, so it doesn't have an F, and doesn't have an A because it isn't an American depository receipt or whatever the code is. You don't want to eliminate everything. You want to find out about it, okay? So this shouldn't be that big of a deal. It is? Is this a big deal to you guys? NASDAQ stocks have 4 symbols or more, okay? New York stocks have 3 symbols or less. How about C for Citicorp, GE for General Electric, IBM for International Business Machine. They have 1, 2, or 3. F is Ford. GM is 2 letters, General Motors. Okay, AT&T is just T. Everybody with me? So that's all this we're talking about here. Okay, and by the way, if you haven't gathered, we're kind of back up here in the level 1 section again. You don't see any pretty colors behind here. We've just looked at our symbol. Now we have last price and last share size. Isn't this a duplicate information of our prints? The last trade should also be in our prints over here, huh? So this one and the prints better be the same. So you can either look at it here or you can look at it in the prints, because it's a duplicate information. Okay, the last price and last size then creates the change, and some platforms even give you the percentage change, which is nice, okay? What is the change or status? It is the difference between yesterday's closing price and today's most recent trade. So yesterday's close was 1634, and the last trade was 1693. Well, if you went to Catholic school and you do the mathematics, that better come out to 59 cents. 93 minus 34, okay, is 59 cents. And like I say, this particular platform also gives it to us in a percentage move. So this stock has moved, what, 3.61% today from yesterday's close. Everybody with me on that? Any challenges there?
And Furthermore, it shows green over there because it's still plus over yesterday's close, yet it's red on the last price because it was on the bid side.
Absolutely. Very good. What is the inside bid? $16.93. Okay. By the way, you can see it right here.
Yeah.
So because it was the color red here, remember our scheme, that would be the inside bid. All righty, so very good. And of course, we have the bid right here, so we can see that that's true. No, let me say that again. Okay? Here is our level 2 again, and we have the bid and the ask. Okay? The current bid is $16.93. The ask is probably, not probably, what is the ask? $16.96. What is the spread? 3 cents. Okay? If we have our prints over here, and the $16.93 is printing for 10,400 shares, what color is it, David? Red. If the next print, what's the color of this print? Okay. What's the color of this print? White. White or gray. It's in between the spread.
Oh, I'm sorry, okay.
Is 95 between 96 and 93? Okay. What is the color of this print? You have to be able to remember 2 slides ago. It's purple. What is the color of this print? All righty, guys. We're going to dive back into this in a few minutes. Let's